Hi, I'm Michael Yardney. 2009 will be remembered as the year that the property boom snuck up on us. A mixture of a booming population, an undersupply of dwellings, record low vacancy rates, low interest rates, increased affordability, and an improving economy were a volatile mix that ignited the property boom in some of our eastern capital cities. Now, if we look at the growth figures for our major markets to date, Melbourne was the star performer. It delivered an average gain of almost 15% this year. The Sydney market's finally moving up and has seen price climbs of almost 10% in the first 10 months of this year. Over the same period, Darwin property values increased by 12.7%. In Canberra, prices rose 11%. In Brisbane, Perth and Adelaide, average prices increased 6.9%, 6.1% and 4.6% respectively. Now, of course, they were averages, so some properties did much better than that. And no one would have dreamed of these types of increases at the beginning of this year when we were worrying about the global financial crisis. Look, remember, even back in Easter time, there was a threat of that Australia could fall into recession, and many economists predicted property values would plummet. By the way, I'm on record suggesting that property values were not going to tumble due to the strong fundamentals underlying our property markets. Now, my forecasts have proven to be correct, and I'm basing my predictions for the next year on the same fundamentals. But as I said a minute ago, as these statistics are just averages, they don't really show the true strength of the property markets in some parts of Australia where values have increased substantially more than those I just quoted. Now, 2009 was also the year that property investors were able to increase their rents as vacancy rates remained at historic lows, and there was a real shortage of housing, wasn't there? 2010 is going to be another great year for property because values are going to continue rising and rentals will increase further. But this is not going to increase equally around Australia. Some areas will significantly outperform others, creating a much bigger gap between the rich and the average Australian. There's going to be less growth in the cheaper suburbs and in the outer suburbs where there's plenty of new houses. This is where all the construction is happening and where rising interest rates are going to bite more because in those areas affordability is going to be lessened. But if you contrast in the inner suburbs, increasing demand from owner-occupiers, investors and tenants, that's likely to maintain the strong market conditions that we've enjoyed most of this year. You see, current tight lending criteria has just meant that developers aren't able to build medium density and high density apartments, townhouses, apartments, those big high-rise buildings, and this lack of new rental properties, together with a growth in the 20 to 24-year-old demographic group, means that our vacancy rates are going to remain at historic lows and rents are just going to have to keep rising strongly. And this situation is unlikely to improve over the next 4 or 5 years. Now you may ask, well, why would it take so long? Currently, builders are just not building enough apartments. In fact, this year there's about a 40% drop in activity in those apartment building constructions compared to the past. Of course, eventually the banks are going to start lending to developers again, but this probably won't start until well into 2010. And with the time lags involved in getting these larger developments onstream, I guess I should say, all this means is it's going to be quite a while before our vacancy rate improves. What about the argument that all those first home buyers are dropping out of the market, somebody may be thinking? Well, they've already been replaced by people upgrading their homes and investors returning into our property markets. There's already strong evidence of this with the levels of loans applied for back to the levels of 2 years ago. And this is what I call a leading indicator. People take out loans before buying properties. So this points to a strong future property buyer demand. So if you want to increase your wealth through property and take advantage of the new property cycle that 2010 is going to bring, 2010 should be a great year for you. But you need to buy the right property, the sort that's going to increase in value above the averages, in the right location and of course at the right price. And especially this year, you're going to need to structure your finance correctly and in particular allow for the changing interest rate environment because interest rates are going to improve. Now, I'm sure as 2010 rolls on, the Chicken Littles are going to come out again. Remember those people, they said the sky's falling because interest rates are going up and affordability bites. However, smart investors were going to be out buying the right sort of property while others are going to hold back. You know, sitting on the sidelines waiting to see how things are going to pan out may seem safe to some of you, but it's likely to mean that you're going to miss out on some great opportunities. You see, it's easy to do nothing. I remember Donald Trump once saying, "Nothing is easy, but who wants nothing?" Now, this is going to be my last market update for 2009, but we're going to return in mid-January 2010. And over the next year, we're going to keep you informed with tips and advice from Australia's leading property experts in my fortnightly e-magazine, as well as our monthly Ask the Experts webcasts and through the seminars I'm going to be conducting around Australia. Also, if you'd like to educate yourself to take advantage of the next property cycle, please buy my fully updated new third edition of the best-selling book, How to Grow a Multi-Million-Dollar Property Portfolio in Your Spare Time. You see, over the last 4 years, my book has become a property investment classic. And this new edition is going to give you updated strategies to take advantage of the new property cycle. So please click on the link below to find out more and order your copy today. Now, by the way, over the break, you can keep up to date with all the latest property news from Australia and the international press at the property news page on the Property Update website. Also, when you've got some spare time, take the time to read some of the many articles on the Property Update website, or listen to some of those webcasts that we've done over the last year. You could have some great interviews that you can either listen to live, or you can download them and listen to them on your iPod while you're lazing on the beach or wherever you're going to be. And if you'd like to keep up to date on my regular tweets about property, please follow me on Twitter. Just click on the link down below. 2009 has been a great year for me personally, and I look forward to taking advantage of the property markets in 2010. Pam, who's actually at the back of all these cameras and these market reports I do, as well as the editor of Property Update, Bronwyn Davis, and in fact the whole team at Metropole, wish you a joyous festive season and a healthy and prosperous new year.